Good morning, everyone. It is Friday, February 12th, and this is Nadex Morning Analysis. I am Todd Rich. I am with Nadex. With me today, my good friend Brian Caprice from Keep Trading Simple. Before Brian and I talk about hot spots in the markets today, I would like to share this disclaimer that trading on Nadex involves risk and may not be appropriate for everyone, and that any trading decisions you make are solely your responsibility and at your own risk. Lastly, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes only. All right, let me do a quick little switch because I'm going to start off today because I promised that we would talk about the Dow. If you give me a second here, I am going to just switch over what I'm sharing. And here we go. Let's do this. There we go. I did want to, because we got some questions about the U.S. equities markets, and I think it's a story. It's good to be able to see it, but there's not. It's a difficult one. If you're looking for day trades, it's a different environment than what we're seeing in, say, foreign exchange markets as well as some of the commodities markets, because we've been in this massive bull run. I mean, you can see here we are, the month of February. I think, this is actually all the way back, very, very beginning of February. All right, the last couple of weeks, I mean, it's been nothing but up, 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 up. Some slight pullbacks here and there, and some sideways. Now, I'm going to go ahead and zoom in. Ooh, we got Jen. I can hear her. She is welcome Friday for sure.
I was gonna say she is dancing behind me at her desk working this morning.
I love it.
I was like, wow, she
is always, always, always welcome. All right, so what I wanted to do is I wanted to zoom in here, and we just get here. Here we are from Tuesday till here where we are now. We have seen now. You saw that we were in this massive bull run. It's been up, 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 up. And for the last few days, we've pretty much chopped sideways with some pretty dramatic moves, some emotional moves, sharp down, sharp back up. It's really kind of hard to say what's going to happen without some type of news or impetus. If you were looking for levels today, based on what's gone on this week, there is maybe some support if we saw the Dow come down to the 31,430 level. I'm sorry, the 31,170 level. Hello, the 31,170 level below, 31,170 below. Buyers have stepped in. We could see it earlier in the week. I mean, they tried to push it through on Wednesday. It touched it again yesterday. I don't know. It looks like we're actually forming a bit of a flag formation inside these outer boundaries. Up above at 31,430. That's where we've seen sellers step in, but that's all-time highs. I mean, this is all-time highs up here. So, I mean, if we were ever to come back up here, would we turn off of them? I mean, hit it once, hit it twice. Does it hit it a third time? And then is the fourth time that it goes through? Who knows? So a little difficult to say what's going to happen with something like the Dow or any of these equity indices, barring some type of news. We are in a bull market. We are still seeing a bull market. We're still seeing buyers drive these markets to all-time highs. So for short-term trading, there are some opportunities in here. You're just gonna have to take a look. But it's a tricky one. Brian, do you have anything to add to that for trading U.S. equity indices at the moment?
Yeah, I mean, the biggest thing to worry about today is going to be the fact that it is a weekend, that we are off on Monday. So, I mean, it's one of the things you got to kind of keep in mind when it obviously equities in this situation. Now, I mean, the 15-minute charts have been the ones to grab, particularly open the last, three days in a row, I think. The best trade of the day is the move from the initial open. And again, you were finding on the smaller time frame charts, and NQ, it was definitely on the 15-minute. Huge move down from yesterday up at that 13.7.
Here, want me to bring that
over real quick?
Let me bring. Do you have it, or want me to bring it up real quickly?
I don't have the Nadex platform, but I have charts.
Here, let's do this.
Whatever.
I'll flip that over. You can show the. There we go. Sorry.
Yeah. So, I mean, again, this was obviously major movement down on the 10th. Yesterday, on the 11th, we saw that we ended up tagging it. Right now, we're just kind of stuck sideways channel. So, I mean, as far as what we mentioned yesterday, if we got anywhere close to the 13,750 range, we're looking for shorts. And we late last night, it made another attempt to go, to go at that level and ended up rolling back down. And now we're kind of stuck in that middle of the curve. So, again, I think NQ wise, 13,750 up top. That bottom level, down here at approximately, I know you guys can't see that, but 13,553. Let me change this to black so you guys can see it real quick. Approximately down here again, where that big push on the 15-minute close. Those are two great buy and sell areas. There's this one little hiccup in the middle at 13,630. It's an all right level. If we could get down there, but like I said, right now with 25 minutes to go, we're not actually, so it's unlike where we were yesterday. So again, maybe a little bit slower. S&P kind of the same thing, channeling sideways. I would say there's a decent level up here for shorts, up at 39.20. The one down here, it's been tested, although it's a little bit wide for me. If in the next 25 minutes, if we can push down to this 38.95, there could be something decent. But I really like the S&P right now as much as I like the NQ. The levels are just not as strong. Not as steady, and then the way that they were actually formed are not really my favorite. So, although it's tested, it could be something, I don't know, maybe like a 10 o'clock reversal if we turn negative off the open. But I like the NQ up a little bit better. And then the Dow right now, the Dow, there's there was that. If I go back to the higher time frame, we had a Harry Potter trade in here. We never were able to get out of it. We got super close twice now, but have not been able to hit the 1 to 3 risk to reward ratio positive since we entered the trade. And then on the lower time frames, you can see here on a 15-minute, we actually refined this zone down a little bit, but there's an entrance approximately up here at 31,500, but right now it's just channeling sideways. The European session did not help us whatsoever.
Yep.
So
there, we promised a rundown of U.S. equity indexes. Yesterday, we said we would definitely cover that this morning, so hopefully we covered that well enough. I think what we want to jump over to next, I think I'm going to start us off with gold. The reason I wanted to bring gold up is you mentioned that Harry Potter trade, and gold has really been giving us some off of the levels that you've pointed out. I'm just going to go back for a week. Roughly, and we've had this. I mean, there's pretty much these levels that we've got. 1830 is one, and then this 1800, a large emotional level down below. And again, I like having our homework up here. But as you saw a week ago, it broke through that 1830 level. We came down. It then came back up as touched the level again. Gave us that, and then it rolled over, gave us that confirmation, and you see that lightning bolt. Right now, it broke through that 1800 level, okay, and then it came back up through that 1800 level. And here we go, watch it again, the same pattern, just the other direction. It comes back up through 1800, comes back down, touches it, and then takes off again. And from there, it eventually went, and it did it again right through the 1830 level, broke through 1830, came back down and touched it, took off again. So now it had trended sideways, does nothing, and here we are today. All right, it came down through, and so this is why, I mean, it's rather interesting. If you watch gold, I'm just going to draw this on here. Give me this point to point. It came down through the 1830 level. That's step number one. It goes back up and touches it again, and we get the confirmation rollover, and it looks like a lightning bolt. That's ergo the Brian Caprice Harry Potter trade. I love it.
I better never see Dan doing a webinar on that one. That one's patented me. JK personally, and be like, hey, I need some help here. I need some backup.
But there it is. I mean, you can see it again. It's a formation. If you're looking for it and you've got certain levels that you're trying to identify in gold, it has been for the past week, it's been an interesting opportunity to look at 1830 as well as down here at 1800. What's it going to do now? I mean, it's made this move down now, and we're chopping sideways. I don't know. We'll see if it comes back up and tries to test this 1830 again. I wouldn't be surprised if we saw it drift back down towards the 1800. Again, gold definitely driven by concerns of inflation, and now everyone is becoming an inflation expert. If you start looking at news articles, you are going to see it everywhere. What constitutes inflation? Are we looking at the right inflationary numbers? Are we just looking at CPI? Are we missing the inflation? So now we're going to be having a battle of the economists and the talking heads over what constitutes inflation and what happens after we drop $1.9 trillion stimulus, and if we actually spend it with the stimulus that's piled up already. So I know. So Brian, do you got anything you want to share in gold?
Yeah. If you want to just a continuation from yesterday, a couple things that I feel we need to talk.
Excellent.
So if you guys remember talking about yesterday, obviously the way that I trade is I use supply and demand. I'm looking for areas of buyers and sellers, and I'm taking advantage of that. But I also gave you guys the warning that these zones don't last forever, and typically the magic hit is number 4 that we go through. And I highlighted this yesterday. I expected some type of a bounce off the 1830 level, but I did warn you, and I said, listen, we have to make sure, be very, very cautious of this one, because again, here was hit number 1, here is hit number 2, here's number 3, and magic number 4 didn't even have any type of a hiccup. It drove right through that level, breaking through the 130 level. So again, you got to watch these things. Everybody always says you can't pick the tops and bottoms, and you absolutely can. It's definitely in there. I mean, when buyers and sellers are in, they show you where those things are, right? But again, they don't last forever. So there was your number 4 hit. There's a level a little bit lower down here in 1806. It's another area where you can see that sellers have stepped in. And the one thing I don't like about this is each of these kind of hits got a little bit lower. And there's a zone right around there. But I would say the overall big number is going to be right around that 1806, probably down to like 1803-ish, 1802-ish. If we're going to stabilize in gold and there's going to be a bounce point, it's going to be down there. If we break the 1800, again, there are candles or some sellers in there. The 1800 is a psychological level. It's when the talking heads on the news are like, oh, we've broken 1800 again. Just like if we break 2000, everybody's talking about it. When we went above last time, everybody made a huge deal that, oh my God, we're going to break 1800 again. Boom, it launched through. So I think this one where the tide is going to turn. And interesting enough, you guys look on the right-hand side over here. I'll see if I can make it bigger. I don't know if you're going to be able to see it or not. Oh, yeah, you can. There we go. Look at its performance. So, I mean, gold is supposed to be the ultimate device in this pandemic to be able to make money. But looking at it right in a year, it's up 11%. Year to date, it's down 4%. In the last 6 months, it's down 9%. So far, it's been down 1.25. I mean, the week is up, but the 3 month is down 3.7. So it's very interesting what everybody out there was telling you gold was going to do, and it just really hasn't performed. I mean, yeah, there's a couple little bounces, and it's got a great 1 year, but since the pandemic, look in the last 6 months of the pandemic, it has not been good, primarily because of lockdowns. Go back across and look to see some in the news today. Continued UK lockdown. I don't know if you guys can see this here. I probably make it a little bit bigger. I think we're good there. Continued UK lockdown puts gloom on Q1. And then if we scroll down a little bit farther, we start talking about how in Australia, Victoria State is going to enter a 5-day lockdown. So lockdowns are still occurring. We're not necessarily out of this yet. So interesting, right? I mean, everybody assumed as soon as the vaccine's here, bam, we're done. It's over, right? We're strong recovery, but we're not seeing that yet. And again, gold is the one that's paying the price for it. In addition to that, I mean, I would say that was one of the things we talked about. And again, if it's all right, I want to follow up on kind of some of the other stuff we talked about. Let's see. That's gold. Let's do the pound first, since I was already up there. I mentioned kind of news trading, guys. Again, about not only hitting those 4s, but finding opportunity. Here's that preliminary GDP number this morning, and it double what they expected. Forecast was 0.5. It came at 1.0. Again, it's about finding opportunity, right? Here is your opportunity count. Here's where the news release came out, right where, let me draw my cursor. Hold on. See if I can control it today. There we go. If you guys look right here, I don't know if you guys can tell, it came up and was touching into a 30-minute level at that news release for GDP, the risk on this one was very timely, about 6-7 pips, right? The result, a huge push side blowing past the 1 to 3, the 1 to 5, and it's already down here at the opposing zone. So I would expect a bit of a reversal. But just in 6 hours, about a 40 pip down draw, very, very fast succession. In fact, in the first hour, you're talking about a 20 pip on this one. So even those shorter durations would have worked out very well in this kind of setup. So it's about finding those kind of hits. It is really kind of what we've talked about. One other thing in regards to that would be over here in the oil realm.
Right.
Well, yesterday I also mentioned that we had that one level down here at 58.10. Well, here was the news release, the oil inventory report on Wednesday. Opportunity straight up into that higher time frame zone, that daily that we talked about. There was one entry down. There was 2 entries down. Well, let's look at the number of hits. There's hit number 1. There's hit number 2. There's hit number 3. And this one you could count the push through the zone at hit number 4. Now, this one did give us that here. I'm going to start saying trademark or patented, whatever, after everyone.
You should.
Right? It did give us a pullback. Unfortunately, it didn't get back all the way to the zone again, so it was a little bit harder for an entry. But obviously, it's one of those things that, we were looking for any type of a pullback. There's a couple ways you could have played it. But you can see that the price on this one went pretty far down again before running into buyers over here at 17. As far as areas today that we looked for, I would say that, 58 was the last area where we really saw some sellers. So if we continue to push up just a little bit more, we had that level. And again, I would be watching the 58.70 level for tonight. But at this point, holiday weekend, it's kind of almost at the age now where, let's see where our opportunities exist. Let's find these small little levels and start setting them up in preparation for next week. And in regards to oil, there, I do want to go back. It's not just oil. We do have G7 meetings starting today, and we're already starting to see some rumblings. You're seeing, where was it down? That the China bans BBC World servers following the UK ban on of Chinese network. So G7 economic meetings, we're already seeing some heads butting between here. We have Biden warning that China is going to eat our lunch unless we focus on infrastructure. That could actually provide a boost for oil today. The interesting question that I would have him if I was in the room was, he specifically mentions they have a major new wave on rail, and they already have this, for these. We need to catch up. But his predecessor, and when he was vice president, canceled a absolutely $6 billion large rail investment that was going from one side to the other, but it was supposed to be a high-speed line. I know because my brother-in-law was brought out there for work because it was a major project, and they canceled it. So it's very interesting that now we're talking about rail and infrastructure. And remember, this is not COVID relief. We've just passed $1.9 billion. Is he going to come out with a second package with even more spending now for infrastructure? So yeah. I don't know. I feel like if they hadn't canceled it, what?
Yeah, we've been talking about infrastructure for a while. It's high time we actually started doing something about it.
Yeah, and rail, which when he was vice president, they canceled. So it's like, So we have 8 years. Now we're back to where we were. So, like I said, G7 meetings today could provide some headlines. A lot of times it's not necessarily, early morning, and unfortunately, I think it's going to get wrapped in the day. But just be cautious. Any big headlines about, world COVID relief or any vaccine, anything, there could be some big things out of this G7 meeting today. And again, that could be the catalyst that moves the indices today.
Yep. That's awesome. And by the way, I want to bring this up quickly because it is a holiday weekend, and we're trying to tee up to start thinking about what you would want to look at for today, but also maybe what you want to start thinking about for next week. Brian and I are going to be doing this on Monday. Yes, Monday is a holiday, and Brian and I are going to work a little bit on it. Interestingly enough, the whole world does not celebrate President's Day in the U.S., so Nadex is going to be open. If you take a look, we are going to open at 6 p.m. on Sunday evening, and we will have the trade date of Monday. Okay, so we are open. If you wanted to do something, if some news comes out this week and you wanted to do something, now it is going to be limited what we do have to offer because we want to offer products that where there's going to be underlying things trading. You can actually see on the updates section of our platform. And what Brian and I are going to talk about, we'll try to do an abbreviated session, but we're going to be talking about us forex pairs: Aussie dollar, euro yen, pound dollar, dollar yen, and you can see what we've got listed. Now, Brian and I are going to be doing this at 8 a.m. in the there's only going to be a couple of hours after we do this, because the exchange does close early. So we'll try to keep it to a quick session on just what's going on in those markets, and talk about maybe any news that we did hear over the weekend that comes out of any of these meetings, and what you might want to be looking for Tuesday. But we are going to hit you with just a little bit of information, gives you a couple hours on Monday morning if you wanted to do something in one of these forex markets, or hear what you might want to be paying attention to Tuesday for Monday night opening for Tuesday.
Hey, Todd, switch over real quick. A new headline just popped up, and it
All
kind
right,
of goes
let me
with
do
what we
that.
just
That's
mentioned.
perfect. Okay,
I know we
great.
got to go. And
Yeah,
we got to
I
roll. Guys, this just came across from the BBC that Russia warns the EU it could cut ties over economic sanctions. Pretty interesting. They're talking about, the EU bloc imposing powerful sanctions. It says economical, painful sanctions. And they're talking about, if you want peace, prepare for war. He said a break in ties could be triggered by EU sanctions that create risk for our economy, including in the most sensitive areas, basically energy.
Yeah.
So there could be a great catalyst for oil and natural gas today, being that they are the other nation in the world that has a lot of natural gas besides the United States. So again, we have China, Australia. We have China, the UK. We have the US, China. We have Russia and the EU.
Yeah.
Going to make an interesting G7 meeting. There's going to be a lot of headlines.
All right. Yeah, we'll definitely be paying attention to that. Remember, Brian and I'll be back on Monday morning briefly for an abbreviated session, talk about a couple of foreign exchange markets. We can cover some of the news and what to prepare for Tuesday. You got any questions for Nadex, please email us, customerservice@nadex.com. You got questions for Brian. He is very accessible, and he loves getting emails from you guys and interacting with you. support@keeptradingsimple.com.
Mm-hmm.
And with that, I think we've kind of we went
short
way
today.
through our allotted time today, but
we
wanted to get it all in before the holiday weekend. Make sure you were prepared, and there are some interesting things happening in the world which could cause some movement in the markets. So let's all keep our eyes open. Hope everyone has a wonderful weekend and enjoys the holiday, and good luck in the markets, everyone.